Hello, everyone, and welcome to today's webinar on the new Form W-4. I think we're going to just wait just a few minutes here for more people to sign on. So if everyone can just hang on for just a moment, we'll get started in about 3 minutes here. So let's get started with the presentation. Welcome, everybody. Today we're talking about the new Form W-4, what you need to know, how to prepare yourself for the new form that you'll be using in 2020. My name is Britt Waterman. I'm one of the attorneys here at myHRcounsel. And a moment here. So we're discussing what you need to know to stay compliant in 2020. We are recording the presentation, and after the presentation, we will send out an email to all of the attendees with a link to the recording, the HRCI credit code, a Q&A from any questions we get during this presentation, and a brief survey. Please complete the survey. It lets us know how we're doing and what topics you would like to present on next. I know a lot of the Third Tuesday webinars that we've done have been on topics suggested by you. So that's very helpful to have you complete the survey, and you should receive those items within the next few business days. So we've got a lot of material to cover today. Our webinar should last about 30 minutes. I'll be looking at some of the questions as they come in and answering as time permits. Anything that's not covered today will be included in the Q&A that we send out. Additionally, this is general information for educational purposes only. It is not legal advice. We can't provide specific legal advice in this format. If you're one of our clients, we can follow up in depth after the presentation if you have a specific question. If you're not one of our clients and you need some assistance, please sign up and we'd be happy to work with you. So the Form W-4 pre-2020, this is the form that we all know and have been using for years. It's the Employees Withholding Allowance Certificate, and it's based on allowances. So an allowance is claimed for the employee spouse, any dependents, other reasons being single with only one job. It's very simple. The more allowance is claimed, the less money the employer withholds for tax purposes. The form is for employer use, and it's not usually sent to the IRS. So this is something the employee fills out, and it's something that isn't sent to the IRS usually. And the employer doesn't question this. The employee puts down how many allowances they're going to claim. An employee can also request an exemption. They can request an exemption if they have had no tax liability in the previous year and expect to have none in the current year. So you're all familiar with the allowances and requesting the exemption. Form W-4 2020, this was changed in conjunction with the Tax Cuts and Job Act, which was passed, I believe, in 2018. So these changes have been on the horizon for a while. The new form is designed to make withholding more accurate. So instead of just assigning allowances, there's new fields to be entered, new calculations to be made, rather than just using the allowances. The new form seeks to simplify withholding for those with multiple jobs and two-earner families. It makes the withholding and calculation of tax obligation more accurate. For example, if an employee has two $20,000 a year jobs, they could be taxed at a lower rate because their income looks low, but come tax time, they're going to owe on the full $40,000. So this is something where they can account for both of those jobs on their Form W-4 at both jobs, and then that's going to tax them at the higher rate on the full $40,000. So that's not going to be where they would have to pay in at tax time. It's going to make the withholding more accurate. The thing that is more complicated part of the form is that it may require employees to remember specifics from last year's tax return or to specifics from a spouse's job or investment income, things of that nature. It's going to require employees to remember those specific things or get that information to actually accurately complete the new form. So what's different? Just looking at the form, no more allowances. So it's there's no more check for yourself for one child, two child, or dependents. There's now a head of household checkbox that wasn't on the previous form. There's a two-earner family checkbox, and there's an additional income option to have additional taxes withheld from payroll on additional income such as investment income, income from jobs that are not taxed as employees, so side gigs, freelance work, independent contractor work, and that income can be accounted for on the new form. So who needs to file the new form? Employees hired before 2020 can file the new form, but they don't have to file the new form. You can ask existing employees if they'd like to file a new form, but you must tell them that they are not required to submit the new Form W-4, and that if they do not submit a new Form W-4, withholding will continue based on a valid form that was previously submitted. So you can ask them to file a new form, but you cannot require it. Employees hired on or after January 1st of 2020 must file the new Form W-4. And employees hired before 2020 who then want to change their withholding in 2020 and beyond must use the new form W-4. So even if an employee comes to you and says, look, I just, we just had a new baby, I just want to change my allowances. Can I just, change the allowances to 3 instead of 2? It's just a small change. Or I want to correct, I made a mistake, I want to correct this. They have to use the new form W-4. There is no amending the previous form W-4. Even if it's just a small change, if they want to change anything about their withholding, they have to use the new form W-4. So completing the new form, employees may need to review their previous tax return in order to accurately complete the new form. Employees may need to consult family members or accountants. So you should be prepared to give employees privacy to complete the form and to contact others if needed. So employees who need access to a phone should be given privacy and access to a phone if they need to consult their spouse to find out about their spouse's income, or if they need to contact an accountant or a bank or some of that to get information about investment income. They may need they may need to take a copy home for research and require them to complete it on site the following day. You can give the employee the W-4 to take home and say complete it and bring it back. Then the issue is how do you get it back? You can tell the employee that if they do not return it, that you will withhold as single, no deductions, and that's going to result in less take-home pay. But is that enough to get the employee to return the form if they take it home? What do you do if they drag their feet about completing it? You can certainly suspend employees until they complete it, but that's, often not helpful. You're onboarding a new employee because you have a need for, you have a labor shortage, or you have a need to get that employee onboarded and start training and putting that employee to work. Hiring someone and onboarding them and then suspending them immediately doesn't make a whole lot of sense in most cases. So you can give them a day and say, look, this is the form. Come back tomorrow with prepared to fill out this form if you've got investment income, if you've got a spouse's income, if you've got income from a side job or another job. Bring that in and be prepared to fill out the form, and then, give them privacy if they need to contact someone by phone. So they may need to look at it and fill it out the next day. So when you're onboarding that and doing, the I-9 and the typical onboarding paperwork, you may need to give them a day on the W-4. But if they don't complete it, you have to withhold it single with no deductions. And, that's, like I said, that's going to cut it into their take-home pay. When they get their first check, they may see that and decide that they want to accurately fill out the W-4. So completing the new form, there's 5 sections on the new form. Section 1 is personal information. Section 2 is to account for multiple jobs or a two-earner family. Section 3 is to claim dependents. Section 4 is other income, and Section 5 is signature. And claiming dependents is not the same as claiming allowances. There's a calculation that goes into claiming dependents that's different than just the number of allowances. Only Sections 1 and 5 are required. So, you can, if an employee doesn't want to say anything about their spouse's income or about if they have another job or if they have dependents or they have investment income, if they want to keep all that private from you and don't want to give you that information, that's fine. All they have to do is complete 1 and 5, and that satisfies the requirement for the form. But if they do that, they're going to the IRS is going to withhold it using the standard deduction tax rate, so single no deductions, which, like I said, is going to result in less take-home pay than if they actually accurately filled out the form. So here's section 1 of the form. It's pretty much the same as the previous section 1, with the addition of this head of household box. So the head of household box, you read, check only if you're unmarried and pay more than half the cost of keeping up a home for yourself and a qualifying individual. So the head of household box is new. You can check this if you are not married, you're single, divorced, or legally separated, and you are considered unmarried on the last day of the tax year. You paid more than half the cost of keeping up a home for the year, and a qualifying person lived with you in that home for more than half the year. And a qualifying person would be a qualifying child who is single, a qualifying child who is married, as long as you can claim them as a dependent, a qualifying relative that is related to you. So if you paid more than half of keeping up a home for the year and a qualified person lived with you and you were single on the last day of the tax year, you would check that head of household box. Account for multiple jobs. So this is where if you hold more than one job at a time, or are you married, filing jointly, and your spouse also works. If employees do not want you to know that they have a second job, they can use the tax withholding estimator, which is at irs.gov/W4 app, W4 app. And this is the tax withholding estimator. This is what they can use to figure out how much they need withheld, and they can report that later on the form if they don't want you to know that they have a second job. And it's the irs.gov W4 app website. It's mobile friendly. You can use it on a mobile phone. It's really the best way to get the most accurate amount of withholding. If you're checking the box for multiple jobs, you have to check the box for multiple jobs on the other W-4. So either the other spouse, if both spouses have jobs, both spouses should be checking the box on the W-4. If you've got 2 jobs, you should be checking the box on both of your W-4s. But you should only complete sections 3 to 4B on the highest paying job. So the higher paid spouse completes sections 3 and 4B, and we'll get to those. Or you complete 3 and 4B if you've got 2 jobs for your higher paying job. 2 earner families, like I said, both spouses should check the box. The IRS assumes that spouses earn approximately the same amount. So it splits the income threshold in half to get the tax rate. So the rate that applies at $100,000, for example, now applies at $50,000. It can lead to over withholding. If only one spouse checks the box, it can lead to under withholding. If only one spouse should enter the deductions and dependents, the sections 3, 4A, and 4B. If an employee or spouse changes jobs in the middle of the year, they may want to consider having both spouses complete a new W-4. So here's section 3, claiming dependents. Again, do this only for the highest paying job. If you have more than one job or you have a 2-earner household, only one of the highest paying earner, or doing it for the highest paying job if you have 2 jobs, should complete this section. The individual filling this out must do the math, where it's multiply the number of qualifying children under age 17 by 2,000. You don't just put 2,000 in the box. You do have to do the multiplication. If you're explaining the form, you can point that out, but then if they turn the form in, you can't question what they turn in. So you might want to just, go over the form and say, this is where you multiply this, you multiply the number of dependents by 500. But once they turn in the form, you can't question it. So this is where someone may be tripped up, is on this claiming dependents section. Step 4, employees are not required to complete Step 4, where this is other income. Other jobs does not include, it reads other income not from jobs. That doesn't include jobs where there is no withholding. So this is where employees would claim income from, say they drive for Uber, or they do freelance graphic design or some, independent contractor work. This is where they would put that under other income to make sure that they had taxes withheld on that other income. So then come tax time, they're not paying in on that. That taxes on that have already been withheld. Employees should be careful with 4B and 4C. 4C is per pay period. The extra withholding, it's enter any extra withholding that you want per pay period. You can see here, enter any additional tax you want withheld per pay period. That's not annual. The same with deductions. They need to use the deductions worksheet on page 3, or at that, the best way is that IRS withholding estimator at irs.gov/W4 app. Otherwise, use the instruction sheet on page 3, because you want to make sure they're not just putting the standard deduction in that box, and that they're not putting an annual amount in here, because you can't. You have to accept what they put in. So when you're going over the form prior to them filling it out, you can say, this is there's some math involved here, and the best way is to use this app. You can provide them, if they don't have a mobile phone, you could provide them a computer in a private location so that they can use the IRS withholding estimator in a private space where they're not going to be self-conscious or worried about the employer seeing the amount of additional income that they may have. Section 5, signature. Signature section hasn't changed. It must be signed. They cannot cross out the under penalties of perjury statement. If they do that, you can accept the form. It does happen. Some employees have an objection to that statement, but they cannot cross that out. If they do, you have to reject it and take action to get a valid W-4. But other than that, the new form is the signature section is the same. You may still have exempt employees. Exempt employees are, again, they had no tax liability in 2019 and expect to have none in 2020. They may be exempt. Exempt employees must file a new Form W-4 every year. So if you had an employee who was exempt in 2019 and expects to be exempt in 2020, they do have to file a new Form W-4 this year. Exempt employees must write exempt below 4C. There's not a section, a specific block for it. If you can see 4C, they must write exempt right here below 4C on the form. There's not a box for it. So if your W-4 is electronic, you have to provide a space for the employee to enter exempt, which it could be complicated entering that on an electronic form, but they do have to have a place to enter exempt. Payroll issues. Employers do not necessarily have to have two separate payroll forms or payroll systems, because the same withholding tables are used for both forms. You can use these tables, apply them separately to systems for old and new forms, or rather than having two separate systems, you could use a single system based on the redesign form. So to do this, you would enter 0 or leave blank information for the old forms for the data fields that capture the information on the redesign form, but that was not provided to you under the old design. additional guidance will be provided on the payroll calculations needed based on the data fields on the new and old form. So that's you're going to want to check in with your payroll provider how they're going to be handling this. But you don't necessarily have to have two separate payroll systems with the new form. It's because the same withholding tables are used, but it is a choice that you will have to make. Effects on state withholding. 10 states rely on the federal form W-4 for allowance-based withholding. That's Colorado, Delaware, Idaho, Nebraska, New Mexico, North Dakota, Oregon, South Carolina, Utah, and Wisconsin. Those states, as of the end of 2019 here, did not have their own state withholding form, and they relied on the federal form for the allowance-based withholding information. So they gave the federal government gave the states the option of either developing their own allowance-based form if they wanted to keep the allowance system for state income tax, or of switching to the new method so that they did not have to have their own state withholding form and could just rely on the federal input. So Delaware, Idaho, Nebraska, Oregon, South Carolina, and Wisconsin created their own allowance-based form. So in those states, there will be a separate form W-4 specifically to that state using the allowance method. And in Colorado, New Mexico, North Dakota, and Utah, they changed their system to accept the new input in the new 2020 W-4 form. So they're set up to accept the input from the federal government and are not using the allowance method anymore. So next step, don't panic. The changes are not that radical and will not change your onboarding process dramatically. The only thing is that may be different is that employees may request privacy or additional time to complete the form. Also, employees may complete the form incorrectly, and their withholding may be off, and they may notice with their first paycheck that their withholding is off, and they may need to go through and complete the form again. That's probably the biggest hassle that can come from this is user error when employees fill out the new form, and that employees may need additional time to track down the information before completing the form. But communicate to your employees about the changes to the W-4 and allow them the chance to update their forms. So current employees, like I said, they're not required to update their forms, but they are certainly allowed to and the benefit of the updated form is more accurate withholding. So if they want to return a refund at tax time, they're better able to set themselves up to receive that refund. If they want to have, if they want it to even out and not have a refund but not have that liability at tax time, they're better able to do that using the new form. So you can communicate to all of your employees and say, the W-4 is changing. It can allow you to withhold more accurately. So if you want to set yourself up for a refund, or if you want to be even at tax time, this is a better way to do it. But don't communicate that it's required in any way because it's not required, but allow your current employees the chance to update their forms. Direct employees to, like I said, the irs.gov/W4 app for assistance in calculating deductions on the new form. The website, it's like I said, it's mobile friendly, it's easy to use. If you give employees a day to complete the W-4, they can go home, gather their documents, run the calculator, and come back with the correct info. Again, if they don't come back with any information, you warn that you'll use single no deductions, and their withholding will be off on their paycheck. And if employees don't follow instructions and they do have a problem with what is withheld on their paycheck, like I said, they can fill out a new form and use the estimator this time. But the app is it's very easy to use. And if employees have a tax return from the previous year, they should be able to run that information through the app and be able to estimate that. And like I said, if employees don't want you to know about investment income, or they don't want you to know that they have a second job, they don't have to check that multiple jobs box. They can enter that information under 4C, other income. I think we can go back to 4C here. Yep, they can enter other income, and they don't have to check the box for having a second job. So that ends our presentation today on the new Form W-4. Thank you all for participating. Remember, compliance is not optional. And remember, we'll be sending out a summary of any questions that come in from today's session, as well as a link to the recording and that HRCI code. So thank you all for participating. I hope you all enjoy the rest of your day.